welcome to Avalara's webinar on collecting sales tax in Colorado. Thank you for joining us today, and I hope that we can cover some of the things that you care about knowing about Colorado. I'll tell you right now, it's tough to know everything about Colorado because it's truly tough to know everything about Colorado, and it is impossible to tell you everything that there is about Colorado sales tax in 1 hour. But we're going to give it a shot, and we're going to go over the really good stuff, and we'll give you a hint of what the really bad stuff is, and we'll see how things go. So that's me, Director of Government Relations with Avalara. 10 years running the South Dakota sales tax, 7 years running the thing called Streamlined Sales Tax, a lot of years working with State Department of Revenue, state politicians, all of it, almost all of it, exclusively with sales tax. So our agenda today, we're going to talk about what getting started. If you're a new retailer in Colorado, what does the state tax and what does the state exempt? And then the thing that is a whole semester in a college graduate school all by itself, local taxes. I'll talk a little bit about sourcing and then filing a return and making a payment. So they're going to call you a seller, they're going to call you a retailer, they might just call you a business. They have a registration requirement, as every state does. In fact, it's against the law in Colorado to collect their sales tax without being registered prior to collecting the sales tax. That's not unique to Colorado. They're kind of strict on their enforcement of it, so it's important if you're going to start collecting their sales tax, you should be registered before you do it. You must have a permit for each place of business, which is kind of normal, but it's complicated in Colorado because of the local administration, and we'll talk about that later. Licenses, this is something that's not completely unique to Colorado, but is really not typical around the country. These licenses expire. And so your permit in Colorado is going to expire on December 31st of each odd numbered year, and you must renew it. They'll send you a letter telling you that your license is about to expire and give you, presumably sufficient notice that you're, can go through the process of getting that renewed. When you get your first license, they're going to make you give them $50. And that $50 is a state goes on your account. It's a credit on your account, and you use up that $50 the first time you submit a return, assuming that you return $50 back to them. But you can't get a permit in Colorado without giving them $50 as a deposit. In addition, there's a license fee, $16. Lasts you every 2 years. Every 2 years, you have to pay them $16 for the right to have your sales tax license. All of that's relatively normal, although most states don't require a deposit and most states don't charge a fee to get a license. What is unusual in Colorado is their home rule local governments. Home rule is a constitutional provision that exists in a lot of states, and it gives local governments authority to do things outside of or differently from how that is prescribed in state law. But there is a long-standing principle in state law that local governments are children of the states and have only that authority which is given to them by the state legislature. There are, like I said, those states that have home rule, and home rule is a process by which the local government can exercise more authority or exercise different authority than what is prescribed by state law. In Colorado, it is rather generous toward the local governments. They have the ability to do things quite differently than the state does things. And one of the things that you're going to encounter doing business in Colorado is if you have a location or somehow engaged in business in the local government, they're going to require you to get a separate license, and they are going to impose another license fee on you. And some of those license fees frankly, the majority of those license fees are greater than what the state requires. And I saw one this morning that was $295, and there was a footnote attached to it, and I couldn't find the footnote, so I'm not sure exactly what type of business he has to pay a $295 fee in this one particular city, but I wouldn't want to be one of them, and I hope you won't either. Legal requirements: you're an agent of the state. That is not your money. The moment you collect a penny of sales tax from a customer, that money is the state's money. From their perspective, you are a trustee or a custodian of those funds, and they pose lots of rules associated with trustees that you need to be very careful with. So remember, it's their money, even if it's in your checking account. So what does the state tax? They tax, they're traditional states, and by traditional I mean they tax all tangible personal property unless that tangible personal property is specifically exempt. So if you're selling something in Colorado and it's tangible, it's a chair, it's a glass, it's a piece of carpet, it's something that you can hold in your hand and you can see and you can weigh it and you can feel it and you can touch it. You should start with the presumption that Colorado taxes it, and the local government in Colorado tax it. If you're looking for why it might be different than that, you need to find a statute that says, okay, in this particular case, the state doesn't tax that thing. So it is the rule, everything's taxable unless you can find a statute that exempts it. Now the reverse is in place for services. You can start with the presumption that if you sell a service in Colorado that it's exempt unless they have a statute that makes it specifically taxable. So in that situation, you're out looking for a statute that taxes what you sell instead of looking for a statute that exempts what you sell. State sales tax rate is 2.9%. It is the lowest state sales tax rate in the United States. Like many states, Colorado does not tax a broad range of services, but it does tax rooms and accommodations, catering, commercial gas and electric service, steam, and intrastate telephone and telegraph services. And what do they exempt? They exempt food for home consumption, and home consumption is, their definition of home consumption is very similar to the phrase home consumption used in other states that exempt food. Machinery and machine tools, gas, electricity for residential use, occasional sales by charitable organizations, farm equipment, food sold through vending machines, low-emitting vehicles, renewable energy components, beetle wood products. And if you're not familiar with the Colorado, Wyoming, Montana, and wherever there are ponderosa pines, the ponderosa pine is under attack from a beetle, and that beetle is destroying tens and tens of hundreds of thousands of acres of pine trees. And the states, all the states that have this problem are trying to find ways of getting that wood harvested so it doesn't become a fuel for a forest fire. School-related sales, biogas production system components, and property use in spaceflight. And I'll tell you right now, there aren't many states that exempt property use in spaceflight. So how do they administer these exemptions? Well, they're a little bit different than most states. One area where they're alike is that the liability for making a mistake is yours. It is the retailer's opportunity to make a mistake, and the state will hold the retailer liable when the retailer makes a mistake. And you make mistakes by not documenting the exemption when you choose not to charge sales tax to a customer. Red Cross walks in, Red Cross says, I'm buying something from Red Cross, and you say, okay, and you sell it to them and you don't charge them sales tax, and 2 years later the state comes in and says, I see you made a sale here, why didn't you tax that? Your obligation is to figure out why you didn't get an exemption certificate from the Red Cross the moment you made that sale to them. You must maintain copies of certificates of exemptions. You must document the support shipment for merchandise that's shipped out of state. And they have a separate exemption certificate for each state exemption. So that list of exemptions that I read you a couple minutes ago, there's a separate exemption certificate that goes with each one of those things. There isn't one exemption certificate that applies to everything that is exempt in Colorado. There is a separate one for each exemption. That is unusual. It's common for a state. Most states have an exemption certificate, and then on that they'll say there'll either be a checkbox where you check, farm equipment, charitable organizations, or some other reason, but you can use one form. Colorado's different. In addition, they have 69 cities and a couple counties that administer their own sales tax. And those local governments have their own exemption certificate. And when you're making a sale in that city or that county and you're not charging their sales tax, they might let you get by with providing the state exemption certificate, but you should not count on that. You should be for getting the local exemption certificate as well. And to make things worse, I read to you the list of things that the state exempts. The home rule cities and county do not have to follow that list. Matter of fact, they don't follow that list. You should start with the presumption that if you're making a sale into a home rule city that is exempt from the state sales tax, you should make the presumption that it's probably subject to local sales tax. And then you need to figure out whether or not that is or isn't true. And unfortunately, there is no central source for this information. To know whether or not the city of Westminster, Colorado taxes something the state exempts, you've got to call the city of Westminster. And you have to speak to them. And if you're making sales in all 69 home rule cities and you have what is enough physical presence that you have to collect their sales tax, you got to make that call 69 times. And so it's extraordinarily complicated to comply with Colorado sales tax because the local governments don't cooperate with the state. They're not legally required to follow the same rules the state follows, and they require you to come to them. In fact, if you go to a state's website and you look for information about home rule cities, you find a couple brochures, and every one of those brochures says, this is the phone number for Broomfield, Colorado. This is the phone number for Pueblo, Colorado. If you want to know something about their sales tax, call them. So local taxes, there are lots of them. And this is an important tax for local governments. Up to 80% for some of these local governments, the sales tax provides 80% of their total tax collections. In contrast, the state is only roughly 34% of their revenue comes from the sales tax. 34% is kind of the national average, but it's unique in Colorado because the way Colorado does business is very unique. So in addition, with all their many jurisdictions, there are many places where the one jurisdiction overlaps the boundary of another jurisdiction. Actually, when Avalara teaches its new employees about how to help merchants understand the differences in sales tax rates across different jurisdictions, we use Colorado as our teaching tool because there are places, many places in Colorado where the sales tax rate on one side of the street is different than it is on the other side of the street. And not only is it different, but one side of the street can have 2 or 3 taxing jurisdictions, and the other side of the street can have 1 or 2, and they can all be different, or they can overlap each other. This overlap results in around 750 areas with different rates and different bases. Very, very, far and away the most complicated state to comply for sales tax of any state. So, state administration. The state does do a lot of administration, and they administer a lot of local government taxes. I told you there are 69 cities and 2 counties that administer their own sales tax. That doesn't mean that's all there are in the state. So the state administers its own sales tax. It administers 152 city sales taxes. It administers 50 county sales taxes and over 30 special districts. Each city, county, and special district must tax what the state taxes. Now, here's the difference. So if the state is administering the local tax, that city, county, or special district must tax what the state taxes, except for 11 different things. So the state has these 11 exemptions that they exempt, and they allow their they call them statutory governments, statutory cities, statutory counties, and statutory special districts. Those get to choose whether or not they're going to exempt what the state exempts. So the home rule cities and counties, they can do whatever the heck they want. The statutory cities and counties can't do whatever they want, but they still have a tremendous amount of flexibility when it comes to the 11 things that the state exempts. Now, by state law, those 11 things that the state exempts, no, those 11 things are taxable in the local jurisdiction unless they're exempted by a majority vote in that particular jurisdiction. But there's always a majority vote. And when you go through the publications that show you the local tax rates in Colorado, they have a really good brochure out there on this, and it gives you the rates, and it gives you what the state charges that local government to administer their tax, and then it lists in the third column, it lists the exemptions that city and county have adopted, and they sometimes they do 11, sometimes they do 0, sometimes they do 3. The next one will do 4. They don't have to do the same 3 or 4. It's really complicated. A business located in Colorado must collect a state sales tax. It's obvious. A business located in or with business activity in a state-collected county must collect the county sales tax. A business located in or with business activity in a state-collected city must collect the city sales tax. These are all pretty obvious, but it's not always intuitive because you're still talking about located in. So you are, and I'll get to this in a second when I'm done with this slide. Business located in or business activity in a special district must collect the special district tax. Business located in or business activity in cities that have enacted a home rule charter to administer and collect their own sales tax, and you must contact that city. You see that a lot in the state publications. A business that delivers or ships tangible personal property must collect sales use tax for the jurisdiction shared by the retailer and purchaser. This is really complicated because that's you are the seller, and we'll talk about this a little bit more, but I want to start this off. You're a seller. You don't ship things to you're a seller located, and I've got some examples, located in Denver, and you ship things to somebody living in Gunnison, Colorado. You have to collect that tax only if those two, Gunnison and Denver, are shared. So you're the seller, you're in Denver, the purchaser's in Gunnison. Those have to be shared by the retailer and the purchaser before that's taxable. A business entity must identify all tax jurisdictions where they have business presence. You do that on the sales tax return. California sales tax return is the one that we think is the most complicated, and that's the one we teach our staff when we try to teach them how to administer sales tax. We couldn't use the Colorado one because there are things that you have to know that you can only get from a licensed business. So it's impossible to complete the Colorado sales tax return unless you have information specific to that licensed business, and which is why we don't use it in training, because that information isn't available to us. So state administered or not, and this is a list, and I'm not going to go through these individually, but I'm just going to show them to you. And these are the different forms of local governments that exist inside of Colorado that the state does the tax administration for. And that's what makes that's what's important about this list. This is a list of, oops, where did we go? So let's just start with this. I'm sorry, I went too far. I have put in a note beside some of these. And that note applies to use tax. And as you know, the sales tax is a tax that you charge when you have enough physical presence in the state that the state can require you to collect their sales tax. The use tax is what gets collected by a retailer when that retailer doesn't have that much physical presence in the state, but has enough in there that they're collecting the tax. And you're collecting the, they call it the seller's use tax. It's really the consumer's tax. One of the things that makes Colorado really complicated is that not all local governments have a use tax, which is why if you're someone from out of state, and you're making sales into Colorado, you frankly may only have to collect the state sales tax. And it's one of those things that make knowing what to do really complicated, because you have to know where you have a presence. And so here, you look down here, so there's 8 local improvement districts, state administered, and there's no use tax in that. So that's just a sales tax. You have to be physically located inside that jurisdiction, inside that one of those local improvement districts, before that tax applies to you. It doesn't apply to you if you're making sales that are shipped into the local improvement district. That's not taxable. Same thing. 3 mass transportation districts, 2 of them do not have a use tax, 1 of them does. The only way to know that is to really, really understand the Colorado sales tax. So there's 152 state-collected cities where the state collects the city sales tax. 62 of them do not have a use tax. 25 that have a use tax, the use tax is lower than the sales tax rate. And then where there is a use tax, it only applies to motor vehicles that are registered in that city and building materials for projects inside that city. 50 state-collected counties. 22 do not have a use tax. 4 have a use tax, but their use tax rate is lower than the sales tax rate. And once again, that use tax only applies to motor vehicles and building materials. 2 self-collected counties. 70, I think it's actually 69, I apologize for that typo. 69 self-collected cities. They get to choose their own rate. They choose their own tax base. For the most part, they have the same tax base, but it's for the most part, and the only way to know where they differ from each other is to call them. A little history. When I started, I told you that the Colorado state sales tax rate is 2.9%, lowest in the country. They also have one of the smallest tax bases in the country. A long time ago, the Colorado Constitution was amended to include a taxpayer bill of rights. They call it TABOR, T-A-B-O-R. And this particular taxpayer, and there's several states that have taxpayer bill of rights. This one is unique. This one ties the growth of government spending, and this is government by government by government. So there's a rule that applies to each of these. This concept of the limitation applies to each individual government by itself. So there's a limit on how fast the government's revenue can grow, and it's tied to population and economic growth. And I used to remember what it says, and it's been too long now, but if a government exceeds that growth, you have a great year, and there's a lot of sales tax collections, there's a lot of income tax collections, but your population and your economic activity haven't grown by the amount of tax receipts. So under the Colorado Constitution, you have a surplus. Under the Colorado Constitution, you have to return the surplus back to the consumers in your district. So, and this applies individually. So the rule applies to the city and county of Denver, and it applies to the state of Colorado. The state of Colorado may have a surplus. The city and county of Denver might not. Their economy is different. They're a portion of the state. State's economy may be doing great, but the city and county of Denver maybe not so great. So this surplus concept is applied uniquely and individually. So over the years, when Colorado's economy was doing really well, the state, it was in many ways easier for the state. It was easier for the state to change their tax structure than it was to refund the money. And so they have over the years lowered their sales tax rate. They have a big surplus, and so instead of refunding money to people, they've lowered the sales tax rate. Or they have a big surplus, and they're concerned they're going to have a big surplus year after year after year, so they give a refund in year one and then lower the sales tax rate so that in year two they don't have a surplus. They've also done this with taxability. They would look for something that they taxed that generated that amount of money, and they would exempt it. Well, because this Tabor thing is government specific, the surplus and the budget rules are different. And I mean, well, they're the same for each unit of government, but each unit of government stands alone when it comes to determining whether or not they have a surplus and have to give the money back. So the local governments in Colorado that has a sales tax said, state, you can do whatever you want with state sales tax. Because if you have a surplus and that's how you want to deal with that surplus, you just go ahead and do that. We don't have that surplus. Therefore, you can't make us subject to the same changes that you do to yourself. That's how the tax base between the state of Denver and its local governments has changed over the years. The state, when the state decides it's going to exempt something today, it's just automatic that that exemption doesn't apply to local governments. The tax base in home rule locals is much larger than the state sales tax base. Typical home rule city has 30 products and services that they tax, taxes over 30 products and services more than the state does. So there's all kinds of things that a typical city in Colorado will tax that the state has exempted long ago. So I told you that when we teach our new employees sales tax, we use Colorado's boundaries in overlapping jurisdictions as our example. This is the description of one of the taxing jurisdictions. This is the Regional Transportation District. There's one. It's the counties of Denver, Boulder, and Jefferson. Generally, Broomfield County, except certain areas immediately adjacent to I-25 and Highway 7 interchange. So I lived in Colorado for a while, and my brother lived there for a long time. He lived in Broomfield. I've been to Broomfield 50 times. I know it very well. I have no idea what certain area immediately adjacent to I-25 and the Highway 7 interchange is not part of the Regional Transportation District. The only way to know is to go get to the Regional Transportation District and ask them to show you a map that shows all these different things. This is a typical, frankly, this is a very typical special taxing jurisdiction in Colorado. And remember, there's over 30 of these. And these things are created for really specific purposes, and the value to individuals was sliced and diced. So the intent was that only people that benefit from that little project are going to be in that project. So I'm going to go through here quickly when to collect local taxes. If you deliver an item to a buyer's location in your vehicle or by common carrier, you collect only the sales taxes that apply to the jurisdictions that both you and the buyer are located in. We talked about that before. You have to be in both if you are obligated to collect the tax. If you're only in one, you're not obligated to collect the local tax. New tax may be due for building materials and motor vehicles purchases if you do not collect the sales tax. So that's, like I said, for local governments, building material and motor vehicles are the exception for their use tax. That's the only time you're going to be subject to use tax. Local sales tax may be assessed against the purchaser if it was due but not collected on time of sale. That's normal. So here's an example. And I've got 4 of these examples, and I'm showing them to you, but I'm only going to go through a couple of them, and you can look at these when you get a copy of our slides. If the buyer and seller, and frankly, I took these directly from the Department of Revenue's website because this is too complicated to try to make up. If the buyer and seller are both in the city of Parker, Douglas County, the seller would collect it. So the buyer and seller are both in the city of Parker. The seller would collect state sales tax, the RTD and the CD, regional districts, the Douglas County and the Parker City sales taxes, as both the seller and buyer share all the same taxing jurisdictions. And here's another example where that is different in a couple more. So building materials, and it's really important to look at these examples and think about where you're located and where you're not located, because it really seriously changes where you are doing, where you have to collect. And one of the things I haven't gone through here, and I'm not going to go through this because it's just too complicated. It's a webinar all to itself. Is when you're making these sales in your own vehicles and you're out there moving around, because every time you're out moving around, you need to be registered in that jurisdiction. So if you're located in Denver and you have a store in Denver and you ship things and you deliver things into Broomfield, you have to be registered in Broomfield, and you just can't remit Broomfield's sales tax on your return without being registered there prior to that. The return bounces, and there's all kinds of work that has to be done to make that thing a return that the state will accept. So I said building materials and motor vehicles are different. Cities and counties may impose use tax on construction and building materials stored, used, or consumed in their jurisdictions. The purchaser must pay use tax directly to the city or county. And construction materials for projects for tax-paid entities are exempt. So you build a house in Broomfield, you're going to owe use tax on the construction and building materials and building the house. You build a parish for the Catholic Church, that's not going to be taxable. But to make that work, to qualify, the contractor must secure an exemption certificate from the Department of Revenue for each project. So every time, if your business is building parishes for Catholic churches in Colorado, every time you get a contract, you got to go to the DOR and get an exemption certificate. And then here's just another twist: no taxes due if those materials are picked up by the purchaser and the purchaser presents the seller a building permit or other documentation acceptable to look them at where it's going to actually occur. And then there's a credit. So the amount of the credit must be equal to the amount of the sales tax paid to the local jurisdiction where purchased. So there's all kinds of record keeping that are necessary once you pay the tax that you maybe should have paid to somebody else. So I'm getting down here to the end, and I've gone through this really quickly, and I apologize for going through it quickly. It is extraordinarily complicated doing business in Colorado. The overwhelming majority of almost every city in Colorado has a sales tax. Every county in Colorado has sales. Almost every county, I think it's not everyone. There's all kinds of special jurisdictions. They all overlap. The rates change relatively infrequently. For the state-administered group, special districts and in the statutory cities and the counties, their rates can only change on January 1 and July 1. And the state does a really good job of providing notice when that happens. You're on your own when it comes to local government. The home rule, there isn't a central repository of that information. And while many of them take their public notice requirements very responsibly, it's pretty easy to miss these things, and the rates are all different. They're really changed a lot, and some of them are as high as 4% for those local governments. So if you're filing, if you're emitting more than $300 in tax a month, the state's going to expect you to file monthly. Less than $300 a month is quarterly. Less than $15 in tax a month, you get to do this annually. Colorado is one of the states, and this isn't all that common actually, but Colorado is a state that wants every wholesaler to be registered. So every sale that you make in Colorado is a sale for resale. You have no taxable sales whatsoever. The state still wants you to be registered, and they're going to expect you to file a return once a year. You have to file, even if you don't have no sales, mandatory. If you don't, it sometimes doesn't make any sense. If you don't make any sales, but you still have to file a return, you still must file a return. You'll get a delinquent notice. They will charge you a penalty. There's a minimum penalty for every time when you don't file a return, and they'll charge you a minimum penalty for not filing, even though you didn't owe them any sales tax. And if you are a large business in Colorado and you pay more than $75,000 in state sales tax a year, you must pay them by EFT. Electronic funds transfer is mandatory for big businesses. Now, the state does have a pretty good system for accepting electronic returns and electronic payments. Both EFT, they do both ACH credit and ACH debit. The return is really complicated, and like I said, you have to have these location codes. Otherwise, your return won't balance, and they'll reject it. They'll take your money, but they'll reject the return, and you'll have to figure out how to fix it. The retailer has to know where they're registered. It's a requirement. You have to know, you have to know where you're doing business, because you have to be registered where you're doing business. That's how they account to the local government for the local government getting the right amount of sales tax. And so they're very serious about these location codes, and they'll just reject your return every time. If you try to pay Broomfield City sales tax and you're not registered in Broomfield, they'll take the money, but they won't take the return, and you'll have to fix it. It's really kind of complicated. So that is it, and I apologize for going so quickly, but I wasn't sure how much data these slides would take, and some of it's just too complicated to really cover without going into extreme detail. So if there are any questions, Whitney, can we open this up?
Yeah, it doesn't look like we have any questions right now, but there is a question panel on the side for those of you attending. If you have anything you want to ask, now would be the time. I'm not seeing anything at this time. So Scott, yeah, your info is on the screen here. So if anyone does have questions, please feel free to reach out.
Thank you, everyone. We really do appreciate you taking time out of your busy days to let us talk to you about sales tax around the country. We will do more on Colorado, because we need to do one of these things just on local governments, on home rule local governments. But we don't quite have that presentation developed yet. But stay tuned.